Hi, Jennifer Warren here. I'm actually going to continue talking about some of the things I learned at the Richmond Federal Reserve Bank conference. That was tech-enabled disruption was the topic, and it related to the macroeconomy, but also its applications to the energy world. But specifically, I wanted to talk a little bit about AI, because obviously the markets have gone really crazy the last couple of days. And yesterday I had a piece put up on Seeking Alpha, and I talked a little bit about NVIDIA and just some of what's happening with AI and valuations. But those trends have continued today, and many analysts are weighing in about the impact of this on stocks and the economy. And NASDAQ has gone up insanely, and there's just a huge sentiment shift, and I get it. And so I wanted to weigh in a little bit because there was this one speaker at the conference, and he was really an expert on AI and kind of some of the implications. And specifically, what he was talking about are these large language LLMs, large language models, I believe. And but what it really translates into is that it's going to be potentially a huge productivity boost. And this is going to impact the white collar worker section to a great degree, because it's about it's called cognitive automation. And so basically, it's going to make a lot of the tasks that like a knowledge worker like me even can do quicker. It's almost like going to have an assistant, in many ways, through many fields. I mean, its applications are just vast. And I was reading a paper by this particular gentleman who's at a university. He's a professor, and he's also with the Brookings Institute. And the other thing I can say is, so the use cases for, LLMs and AI are that they can generate content, and the processing power is huge. B, it's also going to be good for building presentations and extracting data and writing code and just all sorts of use cases. And I believe somebody said that Microsoft is going to be integrating it, if they haven't already, into their Office suite. And that will be really, really handy to be able to sort of whip out some slides very quickly. But the other key points I would like to make is that, in fact, one of his discussions of use cases of AI is that it can, in fact, generate superior economic models in the future. These AIs can learn and, see things in different ways that economists normally do, through computers and research assistants and all sorts of things. So it's going to be potentially a big boost. And I just want to show you some slides really quickly that kind of gets at what I'm talking about. So, okay, so this was something that this professor spoke about, and this is looking at the possible growth trajectories of AI, of the AI-powered productivity boom. And as you can see here, blue is this baseline, where here we are at year one, which is pretty much where we are, I suspect. And we could potentially get a 30% increase in productivity. It could even go higher. And then he also spoke about sort of the different eras that we've been in for AI. The old paradigm of the 2010s, deep learning, new paradigm, these foundation models, which are underlying generative AI, builds on deep learning paradigm. And that now the leading category are these large language models, which is what I was talking about, like ChatGPT. And this is only going to get more interesting. And I wanted to also show you, so this is what happened. This is something that Bloomberg culled yesterday. And they were just showing what happened with NVIDIA, that it almost, it's almost joining the $1 trillion market cap club, and which are dominated by Apple, Microsoft, Alphabet. So basically, NASDAQ just got a big boost, and this is also reflected in. There was one other. Here we are. So this is what Bloomberg came out with this morning, just showing of this new rally in NASDAQ, the NASDAQ 100 index. And as you see, it's been going up. And the news, this discussion about AI and NVIDIA's earnings and outlook and everything just gave a big boost to NASDAQ. And I think, with all the valuations that have been, sort of strung out with interest rate rises post-pandemic, it was like the market was looking for some good news. And then there was one other thing I was gonna show you if I can find it. It's the narrative that goes with that particular chart. And this is really interesting. This is what caught my eye and made me take to the airwaves. So basically, the Citigroup strategist was raising tech shares to overweight, and it's because of AI, and so they were doing all this analysis of what this is going to mean. And so now U.S. equities are being powered by the bet on AI because of high exposure to tech mega caps, which was the chart I just showed you earlier. NASDAQ up 27%. Best year since 1999. Strategists cut European equities to underweight and China stocks to neutral. So I will stop sharing right there. So that just gives you a little taste of what this is looking like, what these analysts are starting to work out. And I can say, not just from a financial market point of view, but like the economist point of view, the academic point of view, anybody that's in this knowledge part of the economy can see all these potential applications. And personally, I could see it really enhancing my own productivity as well. And so it's just really, it's really an exciting development. And, I think it just bodes well for lots of sectors. And, this is just sort of the beginning. Thank you for your time.